I'm Kevin Abdulrahman. My guest today is Tammer Qaddumi.
Hey, I didn't go to Harvard either. I was like,
Yeah.
it's happened before. And everyone eats and talks about how great they are. And then afterwards, you take the thing to.
We are very different when it comes to health.
Whoa, this is amazing.
I was actually surprised you didn't wear the Yale jumper.
What was the question? What were we talking about?
I was excited to see where you're going with
Yeah,
that.
exactly.
Yeah.
I mean,
maybe I could get some
marriage
advice.
analogy works for a lot of stuff, but I don't think it works. He hasn't written back, but I hadn't even emailed the guy. It's a good question.
I hope it's not like the good question, which was one of those generic startup questions.
What do you think about Tamar, what do you think about startups?
I will slap you right now. My guest today is one of the founding partners at VentureSouq, a Dubai-based early-stage investment platform. Which means if you or someone you know is at the early stage of their startup, then you want to pay close attention to this conversation. The group has made well over 100 investments, which means maybe, just maybe, your business or your friend's business could potentially be next. Here's something you need to know about my guest. There is more to my guest than meets the eye. My guest was born in Houston, Texas. He is half Palestinian, half American. He got his BA from Yale, and while at Yale, he did a semester at the American University of Beirut. On his return, he interned at the White House under the George W. Bush administration. My guest went on to serve as a Fulbright scholar in Damascus, Syria. And then he spent a year as an investment banker in New York until things got disbanded because of the crisis and he found himself in Dubai. That was 2009. Most of his time after that was spent at Waha Capital, a publicly listed private equity firm based in Abu Dhabi, part of the Mubadala family of companies. In 2013, my guest, along with his investor friends, decided to take the informal club that they had and formalize it. So they co-founded VentureSouq. Today, they are headquartered in Dubai with an office in Saudi Arabia and are the largest investor network in the MENA region. My guest serves on the board of the Young Arab Alumni Association and also a number of other private portfolio companies. He's sharp, he's a thinker, and he's an evangelist for angel investing in the region. And most important of all, he's a realist. My guest is an example of someone who set himself up for success, to be in the right place at the right time. His way of thinking is unconventional. He does not subscribe to the cookie cutter approach. His approach and attitude is one where you engineer yourself for the path you wish to travel. If you were to bump into my guest, here are 2 tips that will get him excited. The first tip, running. He's recently completed the Dubai Marathon and the Ras Al Khaimah Half Marathon. The second tip, TAM, Total Addressable Market. If you really want to get my guest excited, make sure you show him the TAM for your idea or business. I've got a ton of questions. Let's get to it. This is How Do They Do It? I'm Kevin Abdulrahman. My guest today is Tammer Qaddumi. Thank you for coming, man. I appreciate it.
Thanks for having me.
If I was to chat with any of your former bosses, what would they say, or what would you think they would say are 3 reasons they would have hired you? And you can pick any of the positions.
Yes, a good question. I present well.
Okay.
I think. I think I sound good. I come across as being, sort of professional and relatable and have a certain ability to sort of connect with people. And I think that's an asset at most levels, actually, at any level. So I think that's one of my strongest character traits is that I just sort of present okay, And if you just do that, then that's kind of like half the battle.
Yes, and a lot of people try to do this, but they fail.
Right.
Did you develop the skill? Because this is critical. What you're saying is critical.
Yeah.
And a lot of people aspire to do it, or they're under the illusion that they're doing it, and they don't.
Yeah, I think that it is. It's definitely not an inherited skill. It's a learned, characteristic, and but it probably sort of builds off of all of your life's experiences. I think there's a lot of different factors to my life that probably played into it. I'm part of a pretty big family. I'm the youngest in that family, and so you are exposed from an early age to people that are communicating in certain ways, or sort of have ideas that are pretty well mature ideas, and you're exposed to that. I think the schooling system that I went through in the States, in Houston, Texas, was conducive to that. I think it's much heavier on critical thinking and coming up with ideas and presenting those ideas, and so you sort of gain confidence in that way. I think the university that I went to supported that. I think that moving out of, I have sort of a sequence of life where I move, where I'm in one sort of comfort zone and move outside of it multiple times. If I have to look back in my life, then that's how I would characterize it. I think that supports that. So yeah, there's a number of, but definitely it's something that you develop over time. I can't say that I've taken a class on like how to present.
Sure.
Get inspired.
Whether you're in Dubai for business or pleasure, the last thing you want to do is blow your budget on accommodation, which is why I recommend you check out our host venue partners, Rove Hotels. Beyond being price sensitive, what I love about Rove Hotels is the fact that they are a combination of cafe, culture, and just coolness. Even my guests, many of them, when they arrive before we record or after we finish recording the podcast, they actually comment. They go, wow, this place is cool. The vibe is amazing. And it is amazing. So if you're in Dubai for business or pleasure, I recommend you check out our host venue partners, Rove Hotels. This episode is brought to you by Dojo. Whether you're in business or new to business, you need three things: a good website, traffic, and being able to convert that traffic into paying customers. That's what Dojo does best. They're able to create for you a functional, state-of-the-art website, drive targeted traffic, and put in all the elements needed in order to convert that into paying customers. Isn't that what you want? Of course it is. Give the team at Dojo a call and see how they can help you increase your sales and profits. Tell them I sent you. Their website, mdojo.co. But were you conscious of developing this, realizing, hey, this is critical to my success? Because you don't strike me as the kind of person who blends in with the masses. I feel like you have a very conscious awareness and attitude of, I need to stand out. However way you do it.
Yeah.
One of which, what gives it away as well is Yale.
Well, yeah.
I was actually surprised you didn't wear the Yale jumper. I must say, I was surprised.
Did you hear the story about what happened in Dubai?
No.
I'm proud of most of the aspects. I think most people that you talk to about me, they'll say that I trumpet, Texas more than I trumpet Yale. Mm-hmm. I trumpet Palestinian more than I trumpet Yale. But there's many different aspects of my life that I'm proud of.
Sure.
And I make a big deal about to people. But they're here in Dubai. Harvard is the rival of Yale.
Sure.
And it kind of like in reputation, global prestige probably has kind of the upper hand. It's a bigger institution. And they have a massive alumni organization here, and they host these big events. And it's impressive because I'm on the board of the Yale Alumni Association, and we just can't pull off anything like the Harvard people can. They get all these people, they get all these sponsors, They book these big venues, and every year they have these impressive events. So one year I got invited to speak at the Harvard event, and it wasn't like they gave me a month's notice. I got a call from somebody on their side and asking, hey, do you want to speak at the Harvard event? I said, hey, that would be cool. And I said, when is it? And he said, it's tomorrow at 3 p.m.
Welcome to the Middle East.
Well, no, it's not that they hadn't been planning it. It's that whoever they had been planning dropped out. And probably the person, the replacement dropped out. Like I was probably the third or the fourth person down the line. And it's like, can we just get anybody who's going to be willing to come up and take part in this panel? So it's like, I got it. Yes, I understand what's going on here. And like I've planned events before. I know you don't tell people the night before the event that you want them to
I
present.
am option D.
Yeah, exactly. So I said I would love to, I would love to attend, and I can be there. And so I get there, and I get to the panel, and there's like 3-4 people on the panel, and the moderator, he introduces us on our behalf. And so he says his thing, and then he starts asking questions. Of course, I'm like the last person that he gets to for the questions. You can tell by my undertone, I feel like I'm being snubbed. This entire story is about me being snubbed by Harvard. But he gets to me with the last question, and he says something generic. Oh, Tammer, could you talk about innovation in whatever? Can you talk about startups in the MENA region or whatever? Just the most generic question that you could ask, and of course I say, well, that's an excellent question. Before I address the question, if I could just say a few words to the audience, I just want to say it is a lifelong dream come true that I would be invited to speak at a Harvard event. Really something that I never thought that would happen, and I'm so pleased that it's happening now. And before I get to address this really poignant question that was asked, there's something that I'd like to get off my chest. And I stood up and I was wearing a button-down shirt, and I unbuttoned the shirt and I rip it open Superman style. And underneath my button-down shirt, I have just a Yale hockey shirt on. And then everyone, kind of laughs and politely claps, and they think it's funny.
Told you, cutting through the noise.
And
right?
then after everyone is done laughing and clapping, then I reached out behind the seat and I pull on a Yale hoodie sweater on top of that, just to add like extra emphasis into what I'm doing. And then I sit down and just deliver the generic answer to the generic question that I got. And
I'm sure you would have been memorable.
It was awesome.
Yeah.
Okay, it was fantastic. And then after, the funny thing is that like probably 20, 30 people came up to me whispering, hey, I didn't go to Harvard either. Hey, I just want you to know that I also, I went to Northwestern, or I
just snuck in.
Yeah, exactly. So, that was, one of the, I'm really pleased to be able to come on a podcast and tell that story, because it's not a lifelong dream to be invited to speak at a Harvard event, but it is a lifelong dream to be able to prank Harvard in such a public way. It meant a lot to me.
It would have been fun.
Yeah, it was. Yeah. What was the question? What were we talking about?
Okay, the question.
No, you're talking about presenting, or the fact, is this
Qualities,
a conscious? Was this a conscious ability that you?
I guess I would refine the question to saying, when did you realize it to be conscious? Or at what point did you realize it and you became a lot more conscious of it?
I think in at kind of like the second half of your teens, you start to see like differentiating characteristics, and you start to see that some people are comfortable getting in front of people, and some people aren't. Some people are unnatural when asked to, when put on the spot, and some people kind of just can respond in a fairly natural way. So at that point, I kind of I was fine. I was always as soon as I was sort of aware of that as a differentiating factor, then it was like I didn't really feel a lot of pressure in getting up and sort of communicating, right, or conveying an idea, or being challenged, being questioned. I'm fairly confident. I'm not totally self-conscious.
Sure.
And I think that's probably most of it. That there's probably high correlation between being self-conscious and being able to get up in front of people and present. Mm-hmm. Most people you see, when you get them one-on-one, you really can connect. I find that you really, at one-on-one, you can break down barriers with almost anybody.
Sure.
If given the right time and circumstances, you can really relate to people with almost anybody one-on-one. But there is, so that's not what makes someone like whether they present well has no bearing on whether they're an interesting person or a or have interesting experiences.
Yeah, but this is the thing. I'm a public speaking coach, and one of the things a lot of leaders or CEOs or what have you, they realize that they're being judged. We say never judge a book by its cover,
Right.
but we do it all the time.
Yeah.
So if you're unable, especially if you're someone in position or you're in the limelight, people have an expectation of you, we kind of just make an assumption that if you are, say, for example, the co-founder of VentureSouq, I have an expectation just from the title that you'll be able to communicate that message effectively to me if you go and stand up or you're presenting your thoughts. Anything below that expectation has an effect on that brand value. And it's just the reality. People do it subconsciously.
Yeah.
Yeah.
Yeah, absolutely. And I think that's something that I need to be aware of. And I want to make it clear also early that I'm not the sole founder of this group.
Sure.
There are 5 partners.
Yes.
And we're all, equally strong.
Yes.
And our roles are, we're all founders.
Yes.
Which is another important point that maybe we can come back to.
Sure.
The nature of managing an organization where there are, multiple people in charge. This is not. There's no authoritarian structure here. There's no one person who can just, make a decision and then that's what we do. So that's another point.
Get inspired.
One of the questions that I get frequently asked is, Kev, how can I increase my motivation? We see great individuals, we see achievers, like many of the guests that I'm bringing on the show. They have the energy, they do so much, they're in a state of flow. How do they do it? Well, my team and I have released an article which I've made available on kevinabdulrahman.org/blog, the ultimate biohacking guide to increasing motivation. Or you can simply Google Kevin Increase Motivation and the article should pop up right at the top. It's absolutely free. Read it, and most important of all, take the bits and pieces that are relevant to you and apply it into your life to increase your motivation. I hope you find the article of value. If you do, feel free to leave your comments and also share it with your circle of friends. Again, you can Google it, Kevin Increase Motivation. It will be the first link that pops up, or on my website, kevinabdulrahman.org/blog. Okay, why don't we go back to that aspect of the characteristics? So it's been communicating well, or communicating your thoughts and yourself well, and confidence.
Yeah. Yes. Yeah. The fact that I present well is number one. For someone who's hiring. Number two is that I'm aware that I have a certain I have the right pedigree. Meaning I have the right CV. The CV looks good. Yes. Relative to others.
Yes.
And
were you conscious of this as you were going through school and university?
Yeah, that I was. Okay. I tried hard to kind of engineer that. I wasn't trying to be totally cookie cutter. I wasn't trying to be totally template. I wasn't but I was aware that it needs to look good. The trajectory that you take needs to look good.
Yeah. That was something that was not in my scope when I was going through school.
Right.
I absolutely had no idea.
Yeah. Yeah. And that also is a function of the advice that I got. I had an older brother and an older sister, much older, 13 and 15 years older than me, who at the time when I'm kind of coming to, be aware of what's happening in the world, they're going through that. They're going through college, applications, and then getting jobs, and then you get it by osmosis and by direct instruction. Okay, you need to do this and you need to do that, and that's been a huge impact, a huge influence on my life. It's kind of what the older brother and older sister told
you to do.
Yeah.
But the fact that you were actually willing to listen, because many times we're told something and we fail to listen, only to realize 20 years later, I wish I listened. Yeah.
But they were old enough to where, I had to listen to them.
Okay. That aspect of it. Okay.
So number two is that on paper it looks good, and then number three is I work hard. I kind of I bust my ass, and I guess that one way to demonstrate that, or one way to like to prove that is like, hey, can you take my word for it? And look them in the eye and say, yes, I will work extremely hard.
Okay.
And then the other way is for them to validate it by asking somebody else. So that like then of course everything is underpinned by reputation.
Sure.
But yeah, I work hard. Like I'm not I do my own work and I bust my ass.
Yeah. But I know you work hard today,
right?
Because you've got a track record. Plenty of people also know that you work hard.
Yeah.
But if you're at the early stages and you are a real hard worker, not just someone who talks, but you are a hard worker, what would be your suggestion for someone so they can show potential employers or investors that you can bet on me, I'm a hard worker. I might not have the answers, but I'll figure it out. Like, what would you suggest to that person who doesn't have the track record?
I think it's pretty easy. I think that you can identify what is a pain point for any organization that you want to be involved with. Mm-hmm. Not just a company, like if you want to work in, for a politician, if you want to get involved in a nonprofit, if you want to join some sort of a club. It's very easy in any organization. It's easy to identify what they need. If you can't identify what they need, then you can just ask them, what is it that you guys are struggling with?
Yeah.
And so you can get that you can get that information very, very easily, and then you can just produce something for them. You can provide something of value very, very easily. If you really want to work for anyone or join any group, then you can, before, like the first step is giving them something of value. Like, here's a presentation on the pain point that you told me or that I think that you have.
Yes.
Or here's, some other like thoughts that I prepared in the form of an email. Or here's me coming to you well prepared before I sit down with you, knowing what you should need to address. So if you take the first foot forward and say, I'm going to provide something of value to you, then that demonstrates competency, and it demonstrates like a little bit of hard. It goes a long way to demonstrate hard work. That you are deliverable oriented, especially if you give them something like
tangible.
Yes,
right?
tangible. Yeah. Then you're deliverable oriented, which is very, very important, and that you work hard enough to prepare for this particular interaction.
Yes.
So it's not hard.
It reminds me of the conversation we had with Hiba Fatani. She's the senior executive manager at his ruling office, the ruler of Ras Al Khaimah, Sheikh Saud. And she was saying the same thing when she had a meeting with him, and he had big plans for Ras Al Khaimah, and he was considering to have her on board. She had actually gone in with a full presentation. She goes, whether I get the job or not, because I do have that passion for Ras Al Khaimah, I went in with a full-on presentation of whether you take me or not, or whether this works out. Here's my thoughts of what we should do to put Ras Al Khaimah on the map.
Yeah.
And yeah, that suggestion of yours, that's amazing. And also the fact of what you said, which is really critical. If you can't find it, ask them.
Yeah. Yeah.
That's powerful. It's just, it's so subtle and simple, but it's significant.
Yeah, I'm saying first step is figure out what it is, what problem do they have that you can potentially address. That you almost take for granted. It's like that's definitely a precondition to like if you haven't thought about this enough to figure out what problems we're having, then there's no point in applying. I think a lot of people get caught up in the procedural mechanics of like admission.
Yes.
And I understand why. As a venture capital firm, a big part of our job is, we review. We've probably seen over 1,000 companies in the last 2 years. Okay, and so you have to rely on sort of pattern recognition. So can you give me can you show me a description of what you've got that fits within a box, so that we can take that information and compare it to other companies that we've seen. We want to be able to fit a business plan into into a mold and then compare it to the 15 other business plans that we've seen that fit that same mold, and then we can drive meaningful analysis on that. Is that better or worse than the other 15 that we saw? What is the average of this or that or this metric? And is this company higher or lower than that? Fine. So and the same thing with college applications and the same thing with job applications. So the person who's accepting will want to see, give it to me in a standardized format. But if you really care about that job, or you really care about that admission, or you really care about that investor, then you will go, you will satisfy the
framework requirements, right?
But you will also go out of your way to differentiate yourself and provide value to that institution or to that group in a way that is that is unique and that makes you stand out. You have to, you kind of have to do both.
Of the 1,000 that were submitted, very few would have stood out. Could you perhaps share with us a couple that stood out and for what reason?
Yeah, I think that if you want to be sort of practical about how deals move through an organization like ours, it is the warmth and the strength of the source is a major, major factor. As much as I would love to believe that we are totally quantitative in how we assess and totally systematic in how we evaluate, it's just not true, and I don't think it would be true with any firm that kind of does what we do.
Yes.
You are putting a lot of the momentum behind any particular company that comes is coming from where that originated. Who's the person who introduced us to this? Do we trust that person? And if so, then we're going to take this opportunity seriously.
A referral.
Referral, yes.
That's the referral.
Yeah, how you what the source is. What the source is. A referral.
So not just a cold approach. Like if I wanted to get your attention as an entrepreneur with an idea, just to get your attention, it could be a no, but just to get your attention from 1,000 submissions, are you saying that I shouldn't approach you cold? I should find perhaps someone that you trust?
Yes, that is. I can answer that question with an unequivocal yes.
Okay.
I can answer that question, and that's why I paused.
Yes.
Yes, I can unequivocally say yes. If you want to get someone's attention, then look at your first degree of look at your first circle,
yes,
and figure out whose first circle is in that. And that's almost like sales. That's like basic sales strategy.
Yes.
Like one of our companies
/ LinkedIn Navigator.
Yes. I mean that one of our like portfolio companies, he emailed, we had a long sort of email chain, which was so basically what he did is he went all the way through my LinkedIn and said, you're connected to this guy. He looked for everyone, all of my connections who work for any Fortune 500 company in the US. And you're connected to this guy, this guy, this guy, this guy. Half of them, like, I don't even really know.
Sure.
Half of them are close acquaintances that I'd be happy to make an intro. Half of them you don't really know. But for each of them, he put an intro email that said, and what this guy did was it was a software to help companies with receivables. So they've provided a service, their client hasn't paid them yet, and that's a whole thing. The way companies manage receivables is like a big part of a business.
Yes.
And it's something definitely as an investor you want to evaluate how good are you at collecting the money that's owed to you. But he went for each of these companies and did an analysis on what their receivable cycle is. On average, I can look on their they're all publicly listed companies,
sure,
Fortune 500. So they all publish their financials.
Yeah.
And I can see that your collections are moving out, like it's taking you longer as time goes on to collect. As your revenue grows, it's taking you longer to collect, or you're coming down, or your payables versus your receivables are moving in a certain way. So he had this
spent the time to look
for
at
each of them.
Yeah.
And then it was like, no, it was like, yeah, okay, no problem. If you're giving value up front to the guy that you want me to introduce you to, then one, yes, yes, you're doing the right thing by doing it via a warm intro, which is me.
Yes.
And two, you're doing the right thing by giving them something
That's
that
right.
they can use to start the conversation. So yeah, absolutely. Provide, yes, use a warm intro and do something to demonstrate that you care about this particular introduction. Yeah, for sure.
Oh, this is powerful stuff, man.
I hope.
100. It sounds, it's really simple, but what you're saying it's really significant.
It's got a lot of weight on it, yeah.
Yeah.
But
Yeah.
it sounds simple, but it's heavy.
It's just people are lazy. They don't want to put in that work.
Yeah.
Yeah, I think, yes. I mean, I think people are lazy. People are kind of foolishly hopeful. They self-aggrandize, meaning I can't believe, shame on people, shame on company that they don't respond to me. Shame on, investor that he didn't
Where in
reply
reality, it's on you to get their attention.
Yeah, that's right.
You're not even in their orbit. So you need to find a way to even get into their orbit.
Yeah, that's right.
Yeah.
And that's on you. That's on you. It's on you if someone doesn't reply to you. That's kind of like, it's on that. We get that in our business, like in our company all the time. I sent an email and so-and-so didn't reply.
Yes.
That's your fault. Like if you didn't, if you didn't follow up or your email wasn't worthy of attention, everyone's got 50,000 priorities in a day. So how do you stack it? What's at the top of your list to do? And you're only going to get through 5 of them. So how do you how do you
make
prioritize?
it to that top 5?
Yeah, and that's on you, asker, to get yourself to the priority of the person that you're trying to get the attention.
Well said.
Yeah.
This requires it requires stamina. So it requires you to be emotionally, mentally strong. How did you develop that strength? Especially playing the game you're playing. Because even if as someone who has an idea or perhaps is seeking for a job, it's far easier and lazier to just send 1,000 emails that are just templated and will never get your attention because we'll never make it to the top 5.
Right.
So that requires a kind of mental strength to be able to go, I have to go this slow, but I have to do this proper. I have to research Tamar, find out where the pain point is, give value.
Yeah.
Still be prepared not to get an answer. Do the same for the next person, but knowing that I'm doing this right, at some point I'm going to get the response I need. And that requires, that kind of emotional strength and mental strength.
Yeah, it's persistence. Persistence is, you can call it emotional strength. It's the same. It's the same thing.
Yeah.
It's the act or the characteristic of persistence is associated with what quality in a person? Well, the emotional strength to be persistent. It's like if you care enough about the thing, you should just do it. I don't know if it's something that I've developed. It is something that I've developed, but it's not something that I conscientiously worked on. It's just if you care enough about the thing that you're doing, then that should be an output, not an input, I think.
From the outside, it could seem that things may have been easy for you. Can you give us context of perhaps a point in time where you've had to apply this?
We're going through it right now, where there's something that we want, and I'll refrain from going into detail on what that is, and we keep on getting those, but we do have feedback. So you could get a no, and that no and you learn when you get that no, you learn from you learn why you got that no.
Yes.
That's also on you. It's on you to analyze, to look at all the different data that comes from any response from anybody, and to take that and analyze it and respond to it. So that is something that we're going through now, and we have to be persistent because we have a goal and that's what we're going after.
Yes.
The challenge that we're facing right now is that goal maybe does not have uniformity in the persistence of each of the individual members of the group, if that makes sense.
Sure.
So it's like we as a group need to demonstrate this persistence or or this emotional strength
Sure.
and continuing to iterate to get the thing that we want. But when individuals vary in their level of persistence,
Yes.
then you have a situation where some people are maybe carrying, or some people are,
Sure.
you know,
Throws a spanner in the works.
and then you really test the robustness of the team.
Yes.
You know, so that's kind of an interesting situation that we're going through right now. Yeah.
Since you brought it up, there's 5 co-founders
Yeah.
at VentureSouq.
Yeah.
How do you manage to have 5 co-founders without butting heads? Or do you headbutt?
No. We butt heads, of course.
Yeah.
But it's an asset. There is a
What's the framework that makes it work? Because this can easily be the kind of formula for an explosion.
it could be.
Right.
An explosion happens when you get when there's an increase in pressure, when a situation or an environment faces an increase in pressure,
Yes.
with no release of that pressure, and then it gets so strong that it pops. So definitely communication is the valve that releases pressure every time. You just have to have structural methods of communicating with one another about what you're doing. You know, that you have to.
And so I'm keen to know what would be the framework of success, or a framework that has worked for you guys. So for example,
Yeah. Jump in. Do you have like a procedure in place, like a go-to guide?
So we do like the reason that we were supposed to kick off at somewhere between 10 and 11.
yes.
We have every day we have a call. We have a stand-up call. You know, everyone in the company, not just the partners, but everyone in the company gets on the call, or if you're in person, that you get out of your seat and you spend 15 minutes just telling people what you're doing that day. And the main purpose of this is to catch cross meetings. So, I'm going to be meeting with so-and-so. You're meeting with Kevin Abdulrahman. Actually, I was on emails with Kevin Abdulrahman
Cool.
like 3 months ago. So then when I come to you, I go, oh, by the way, I know that you were in touch. So it's like almost like an in-person CRM. You know, you
Nice.
just here's who I'm meeting today.
This is great.
And here's who I met yesterday. If there's any cross loop, it's intended to catch it, and it's also a chance for people to say what they're working on, so that someone like me or one of my partners, we have a grasp of who's spending too much time on what. Like that, if every day someone says I'm working on this initiative, and
Buddy, you've been on this for 3 months.
exactly,
Get on with it.
exactly, and we take attendance on that, and there's a lot that we could do on that, but just do that. That's like just do that. Just 15 minutes a day. Everyone is on the call and they're all just talking, and it really means. You'd be amazed what kind of how frequently it comes up that something gets in the way. And I really push everything. No, I cannot, from 10:30 to 10:45, I
This
just
is a
cannot.
must.
Even we
Yeah.
can sit down from 10 to 10:30, I will step away from 10:30 to 10:45, and then we can continue from 10:45 for another half hour, something like that. It's important that everyone is sort of religiously doing that.
Committed to this,
Because that's
yeah.
a one point in time, there's one period of time when in the day that everyone is talking.
Yes.
We're, more or less a virtual team. We have an office in JLT, but people don't come into the office every day. We have people in Saudi, and people are moving around a lot. So that's really important to keep people on the same page. But even if you are totally communicating, it doesn't negate the eventuality that there's going to be competition for prioritization.
Sure.
Even if you're communicating perfectly, one person is going to want to do one thing and another person is going to want to do another thing. And I was on a panel, and the former CEO of Etihad Airlines said something. He alluded to this very interesting point. He said the Chinese sort of economic growth model is built on 4 pillars. 4 sort of fundamental pillars. The first is centrality of leadership, centrality of decision making. Number 2 is mass availability of data. Meaning, forget about GDPR or any of that crap. We're going to collect data from everybody doing everything. Number 3 is a belief amongst all participants that data drives decision making. Meaning, so one guy makes the call.
But it's based on the facts and figures.
It's based on data, and we have all data that we could ever need, and there's no barriers against any all data is fair game for us. We are going to use that data to make our decisions. And number 4 is perfect fluidity of the labor market, meaning we can move people. There's liquidity in where people go and do what. So we can very, very quickly and easily shift the economy from one thing to another, shift the company from one thing. Those 4 things, that's the Chinese growth model. And you can say that it's good or not good or morally okay or not okay, but it is an effective system at some level, right? We are not, at least on number 1, we're not that at all. We're trying to get there on 2 and 3.
Yes.
And then on number 4, it's not really relevant because we're micro and that's a macro kind of thing. But on number 1, we are democratic. We're not top down. One person decides.
How does it work when a deal is put forward? Or say, for example, one of the founders is excited about a deal. What's the decision-making process?
Yeah,
Before
I get to that, I want to say that what's the flip side? What's the benefit
of a democracy?
And that's total motivation of all of the participants. Everyone feels that they can go and push as hard as they can for their own thing. So as long as we are swimming in roughly the same current, the strength of what you can do is you're multiplied by the number of partners that you have, but also because you're synergistic with each other, it's maybe many multiples of that. And so it's which one do you want? Do you want and you challenge each other and you come to wiser, you ultimately, there's wisdom in broad-based decision making where there could be short-sightedness or blind spots in single decision making. But it's which one do you want? There's arguments for both of them.
Yes.
Now,
and you'll have some days where you're leaning into one compared to the other.
There are many instances where you think, oh man, I wish that just one person was in charge and could just mandate this. We're doing this, and then everyone just kind of fell into place. I wish that there was a chairman who some
would make the final
omnipotent
decision.
Guy or girl who could just say, boom, that's what we're doing.
I think I heard this on a podcast. It was Mark Andreessen and Ben Horowitz having a chat, or one of them was speaking about about having a system in place where whoever brings the deal in, they can do their best in terms of pitching it, why they believe in it wholeheartedly, and so forth. And then it was the role of the others to pick holes in it.
Yes.
But I think if that person was adamant about still going through with that deal because they believed passionately about it or for whatever reason, they were able to do so, and then everyone would come and support that decision.
Yeah.
So they would do their best to negate it.
Right.
And then if they agree, oh yeah, you're right, I didn't think about this, it is not a good idea, or no, I still firmly believe that this is a good one, then everyone would line up and push for it.
Yeah, we had so now to get to the second part of the question is how do you deal with decision making when people are at odds? We've stuck to the rule that everyone needs to be on board for every deal that we do.
Okay.
And so what that results in is lobbying, basically. You need to convince the other partners that what you want to do is the right thing.
VentureSouq on Netflix coming real soon.
Yeah, that's right.
This can be great for real life TV.
Yeah. No. I mean, look, it's I'm a Tamar-centric person because I'm Tamar, and that's the only worldview. So of course, I think everything that I'm doing is the most interesting and most important thing in the world. But I do think there is if I try to be objective, it's a supremely interesting case study, and one that is of relevance because we've done, we have been until this point, we've been a successful, group. Now, if everything crashes and burns, then the interest level in the story would go away. But until now, things are going well.
Yes.
So it is an interesting case study. There was one rule that we created, and it doesn't really come up now, but at one point it was if there's a deal that someone brings, and keep in mind, like, maybe I need to introduce this by the business model. The business model is most funds, they raise a pool of money.
Yes.
They're sitting on that money, and then that money gets deployed. So that's a uniform pool of capital that goes into a number of different deals. And so different partners will maybe go and source those deals, and they're applying to an IC. The IC is the investment committee, is the custodian for the money, and then that's how there's a decision making process. We are, until now, we've been deal by deal, meaning if we decide that a deal should be done, then it gets shared with our limited partners, and then they decide to invest into that particular company. So our decision is not to invest yes or no. It's actually to present the deal to our investors as an opportunity. Does that make sense?
Sure. Yes.
And so we made the rule at one point that irrespective of whether everyone is supportive of this particular deal, if a partner brings a deal and that partner is going to put his or her own money into that, then that is strong enough of an endorsement to show it to our investors. Meaning, even if we are not if we don't uniformly agree that we should do that deal, which means that VentureSouq as a company is not going to put money into the deal, but an individual partner is, then we will go and sort of present that as a VentureSouq opportunity. Does that make sense?
Sure. Yes.
So that was one kind of way to, let's say, marry the propensity for people to go out and do their own stuff. I'm interested in some other thing that maybe is outside of the interests of the group.
Yes.
Okay, don't do that. Bring that in. Don't resist the temptation to go and do your own stuff. Have everything flow through us as a group, because it makes us stronger if everything comes through us.
But having this whole, a number of founders is powerful. It's a double-edged sword.
Yeah.
Right? It really limits the blindsidedness.
Yeah.
Of things, things that I wouldn't have thought about, for example. Oh yeah, I didn't consider this. I didn't think of this aspect. Having, 5 brains look at it and bring in all their experience to the table.
Yeah, I mean, let's look at the flip side.
Sure.
Let's look at organizations where there's a single person in charge. And by the way, there is kind of like an unwritten rule, and maybe even at this point it's written, in textbooks about venture capital and entrepreneurship, that be very, very weary of single founder companies.
That's right. Yes, it's a thing in Y Combinator.
Yeah.
Right. Like Sam Altman.
Yeah.
From Y Combinator, he says it.
He says that.
If you turn up, first thing they'll tell you is, if it's good enough, go find a co-founder.
Yeah, and a lot of people think that that's. I should say I thought you take that as at its word, I guess, but you don't really understand why they're saying that. You don't. Until something happens where you're at risk, and you look back and you say, actually, that is the reason. So I thought, most of the time conventionally you think, okay, that's a capabilities thing. Like, you can't do it just as the CEO. You're going to need a CTO, Chief Technology Officer. You're going to need a CFO, a Chief Financial Officer. From a capability standpoint, you need to assemble multiple people so that you can deliver on what you say you're going to deliver. But that's not the main thing. You could do that. You could have one founder that hires 3-4 people underneath and solve the capability problem. What we have learned recently, like in the last 12, 18 months, is we've had a couple of companies that are not doing well. And you look and you start seeing patterns in those, and what's going on with those companies. And multiple of those companies have been single person in charge. Either they started as single person in charge, or they became single person in charge because someone left or something. But you end up with an organization with basically one founder in charge and then everyone else underneath. That founder has really full decision making authority, because in most of these businesses you have a board. The board is there for protective, guidance, advisory purposes, but not really control. The control still sits with with the founders. That's kind of the basic proposition of these venture-backed companies. So you have one founder who really is the decision maker, and then they are facing an issue. You know, they're having a hard time raising money, or the business isn't doing what it should, and all of a sudden you see a couple of things happen. This is what we've seen. One is there is like a fictional weight that starts being assigned to the board. Like they create there is like the board is now presented as some major decision-making group where it has not been it before then. When things are going well, the person makes the decision, fine, I don't consult the board, that's fine. When things start going poorly, all of a sudden it's, I can't make any decisions on my own, I need to get the board's okay. I need to convene the board, I need to attempt to convene the board every week or every 2 weeks. And the board needs to say if I can do this or not. And I think that is a response to, that's a deflection of decision making. That's all of a sudden, I want there to be someone above me who's responsible for this because the pressure's all on me. Yeah. The second thing is a total disassociation of the professional identity from the personal identity. You start seeing that with the single founders. My life is still awesome. Like, don't let maybe I'm under pressure professionally, but I'm still like living it up. You know, and you start seeing that in social media and in other ways. It's like a clear
Dilution.
Disassociation of that. And then number 3 is like the wisdom of decision making. It becomes like it becomes pronounced that it's just not there. You're under pressure and you are therefore kind of making decisions that aren't well thought through. If Tammer has an idea in his mind, I may think that it's very clear. But actually when I start to articulate it to Kevin, when it starts coming out of my mouth, it wasn't as clear as I thought it was. Actually, when I start saying it, I wasn't as clear as I thought it was in my head. That's level 1. That's
just having someone as a sounding board.
First derivative. Yeah.
Right.
The second is when you actually take it from your mouth and try to write it down on paper. Then when I was talking,
it sounded good up here.
It felt good in my mind. It sounded okay when I articulated it orally, but when I try to write it, it actually doesn't make like you can't. Those lines cross this way. That doesn't make sense. So what you need, like, that's why it's kind of like the strongest, most well thought out ideas are the ones that are just articulated on paper. Here you go. Here it is, because you're just forced to think through issues when you go. But in these situations, it's almost as if the decisions are made without having any kind of like sounding board. And it's hard for the board or any of the investors to be that sounding board, because our instinctive reaction is to say, listen, let's work through this together, and I'll be your sounding board. Let's just, you bounce ideas off of me. That's very difficult. There is posturing. There's always posturing between the founder and the investors. You cannot expect any founder to be on equal level. There's always posturing. There's always spin that the founder is going to give to the investor. It's very, very rare that you find total, straight from the camel's mouth transparency between them, because you just need something from them. You need to preserve a certain narrative for the investors, and that gets compromised if they're totally in the weeds.
Sure.
So those 3, you start seeing the flip, and it's like all 3 of these things would be mitigated if there were multiple people that are in charge. If there was shared responsibility and shared solution from multiple founders who are all in it together. But for the single founder, you start seeing it's not a capabilities thing. It's that the pressure becomes so immense that it's all on their shoulder that they just start like making bad decisions. They start doing the wrong thing. That's kind of what we learned about this single founder thing. So that, for us, we've got 5 partners.
Sure.
So that's, it presents a world of difficulty sometimes, but it also, I think it's probably it's definitely our biggest asset as a group.
You mentioned articulating your thoughts and then writing it down. Do you have a habit or do you have a discipline of doing this on a regular basis?
Yes.
So perhaps prior to a meeting, do you take some time to yourself and you write it out before going into a meeting with the co-founders, or when you're presenting an idea? Or
I should, but I don't.
Okay.
I do it when a problem is already there.
Uh-huh.
And it's like problem resolution.
Okay.
It's at that point, okay, let me take the time to write out all of my thoughts so that it's clear. It's like there's already a problem, there's already an argument. Not only the problem is already there, there's already a disagreement.
Back and forth, yeah.
Yes. And that disagreement goes in multiple turns. Did you watch the presidential debate by any chance? They have the Democratic presidential debate.
Yeah, I didn't watch it, no.
You know Michael Bloomberg?
Yes.
You know the story, you know what's going on with Michael Bloomberg?
The fact that he's willing to, he said he's going to give away his billions and he's running for presidency.
Yeah. But there's kind of like a process to run for the Democratic seat.
Okay.
And Michael Bloomberg has said, I'm going to circumvent that. I'm just going to buy my way directly in the public. Like, I'm not going to go through the party system. I'm just going to blow hundreds of millions into direct advertisement to people in the main cities that matter. And then I'm gonna circumvent the whole party system. So the first time that he actually participates in a debate amongst all of the Democratic candidates was last week, maybe on Wednesday or Thursday. Mm-hmm. It was clear from the debate that he didn't have the ability to debate. He just didn't, he wasn't prepared to debate. So he's getting hammered on one point, right? And then he has to now think about what the response to that point is. As he's thinking about the response to that point, another point is being made. So he's trying to both listen to I'm getting hammered on another point, but I'm still formulating what my response to the first point is going to be. And then you could just see, and at one point he's just silent, and he's just being berated by Elizabeth Warren, who's this, very strong, academic who's well seasoned in debates at this point.
Yes.
And totally, so he just totally came flat-footed. You should watch it. It's actually almost humorous. But my point is, an argument, once you get into the argument, there's so many layers that there's so many different points that are brought up that you can't really, and both sides are just going to you're not going to meet each other here. You're going to bring up this point. That person's not going to respond to that point directly. They're going to respond to some tangential point, and then you've got to...
You need to be prepared. You can't escape this.
Exactly.
Yeah.
So step back. Let me just write out all my thoughts. Here you go. This is where I'm coming from. That's when I write. And I should preempt any sort of disagreement with my written thoughts, but that's not what I do. I respond to something that's already come up, and maybe it's too little too late.
Sure.
Yeah.
Yeah.
Get inspired.
Imagine if you could present yourself, your thoughts, and your ideas with clarity and confidence. Imagine if you could speak to influence and impact. Imagine if you could communicate like a commanding and charismatic leader. Well, you can, given the right information and the investment of effort from your end. How do I know that? As a public speaking coach, I work with CEOs, world leaders, and presidents. And when they hire me, they expect nothing short of results. And over the years, it's been 2 decades now, 2 challenges have risen for me being unable to help the majority of people. I'm usually on a plane, with the majority of my time being booked a good year or 2 in advance. And my one-on-one session to work with someone in person generally starts at $20,000. So we solved the problem by making my public speaking course available for you online. Everything that I teach my clients when I'm working one-on-one, thoughts, tips, strategies, how to do things, all on video, all sequenced in the right order for you to be able to watch, rewatch, practice, and refine your presentation, your speaking, and your overall communication skills. And guess what? You will get results. Now, you can have this course not for the $20,000 that my clients pay me when we work one-on-one. You can have it for $997 That's right, just $9.97. You might be thinking, well, why are you offering something that you charge $20,000 for $9.97? It's simple, because those who want to work with me one-on-one will still hire me. But for many whom I might be out of their budget, this is a great way to develop their communication skills, to cut through the noise, to rise above the rest, and to beat their competition. If you're serious about wanting to develop your skills, to be able to present your thoughts, your ideas, and yourself with clarity and confidence, to be able to speak, to influence and impact, and to communicate like a confident and charismatic leader, then this course is for you. Go on to kevinabdulrahman.org/course and get started today.
This sounds a lot more realistic of how most people are.
Right.
You know, it's like resolution based as opposed to preventing it.
Yeah, that's right.
You know, having a structure in place where.
Yeah. And that would be my number 2 on the here. Tammer he's an angel investor evangelist. I'm a realist. I respond to things and I treat things I try to treat things as they really are. Mm-hmm. And I don't make any sort of normative judgment on whether it's right or it's wrong. It's like, that's the way it is. There are certain, and that's how you should be crafting your strategy.
Sure.
Is knowing how, and I think the best people, the best marketers, the best CEOs are going to craft a strategy around that, not around what theoretically you think should be the case or not.
Yeah. So then as a realist, what would you say is the real scenario that we're looking at here in terms of ecosystem that's different from places like Europe and the States? Like personally, I find them to be quite further ahead.
Yes.
But what are the realities we're seeing today? And perhaps then you can take us through your vision as well.
Sure. It's a challenging market.
Yes.
They all are.
But that's why it's an opportunistic
market,
right?
Yeah. There's tons of opportunity.
Yeah.
But the fundamental challenge is that you have 350 million Arabic-speaking people, something like that.
Yes.
But 350 million people that live in
the MENA
predominantly
region.
Arabic-speaking countries.
Yes.
And these companies, the basic value proposition for any of these companies, a startup company, is that they're coming to the market with either a new product or service or a substitute for an existing product or service, and they offer usually one of 3 things. They offer better quality, more convenience, or lower price. And all 3 of those things come at the expense of margin. Meaning, if you're a company and you're providing one of those three things, then it probably means that you're going to make lower margin than what the existing guy is doing. Or there's a good chance that that's the case. And so
it's a fast battle to zero.
Well, not necessarily. What you need to be able to do is you need to be able to scale. You need to be able to sell to a large number of people. That's where it works. Now, if you set up in San Francisco and you set up a company and you build a product or start delivering a service, you go through all the trial and error. You raise capital when you get to the point where the product works. And by the way, you burn bridges in your home market because you're delivering a product or a service that sucks because you just started.
Yes.
And so everyone in that home market hates you. But as soon as it works, then you go to Chicago and then to New York and then Miami and then Houston, and then you got the whole country of 350 million people that you're selling to, and you're in business. Here, if you build a product or start delivering a service in Dubai and it works, until now, it takes a lot of effort to get it into the next place. And then a lot of effort to get it into the place after that.
The likes of Kareem, for example. When they did well, they had to adjust still and fine tune, right?
Absolutely.
For KSA.
I mean, that's the Kareem case study, is that they figured out, and that's really what we look for, is companies that have demonstrated that they can execute across borders. And there's all sorts of constraints that these borders create. There's banking constraints. There's regulatory, meaning you need different licenses. There's corporate structure, meaning you've got to be owned in different entities that are set up. There's telecommunication constraints. You have to get different plans with different service providers. You can't use voice over IP because it's blocked in some countries.
So even if we're an hour flight difference and we're both in the GCC,
it's not a unified market.
Yeah.
It's not a unified market.
Yeah.
And so now you're going to build a company that is offering more convenience or better or lower price or better quality for lower margin, and it's going to sell to 3 million people in Dubai or 8.5 million people in the UAE. It just doesn't make sense. You need to be able to sell to a large market. It's question number one. It's evaluative point number one for any venture capital firm is show me the TAM, the tangible addressable market. How big is the market that you can sell this into is number one, even before team.
Yes.
Even before product. It's what is the market that you're playing with. So here you have a lot of people who say that 350. I'm going to sell from Morocco all the way to Iraq.
Get inspired.
You know this by now, that we are the #1 YouTube show / podcast that's coming out of the Middle East from Dubai. If you like the idea of having your brand reach at least 1 million eyeballs per episode, then feel free to reach out to my office on kevinabdulrahman.org. Without further delay, let's continue this great conversation. And the moment they say that is perhaps a red flag because you go, they have no understanding of the challenges.
Right. It's the burden.
Or do you feel it's education?
Yeah. It's not a red flag. I mean, it's our thesis.
Yes.
Our thesis is that those constraints are going to go away. Are going to be maybe not structurally removed, but you're going to have business models that are flexible and adaptive enough to be able to work around them, like Kareem was.
Yes.
So our thesis is that we are going to work we are moving towards a unified market.
Sure.
And by the way, that's like challenge number one.
Yes.
It's let's just be aware that challenge exists. Challenge number two is top down versus bottoms up. And what I mean by that is the US, tech market is consumer driven. It's a bunch of companies, not all of them, but many of the companies have built up their strength by capturing and owning the consumer. More and more. And the game is who can own the time and attention span and the wallet of the consumer in a stronger way. More people and stronger grip on those people. And here, for a number of factors, for a variety of factors, is much more top-down driven, meaning the economic decisions and the way that the economy moves is driven from the government down. And so you as a company you need to evaluate whether you try to go around the government directly to the consumer, or you just go and become a service provider to the government. But it's an awkward dance that these startups need to do. If you go directly to the consumer, you could risk tripping up some regulatory monopoly or oligopoly that the government has in place.
Yes.
The banking sector, for example, is owned by a dozen, in this country and in all countries, is owned by a dozen, half dozen, or a dozen incumbent legacy banks that own everything in financial services. They do everything for everyone. And by the way, because they've held such a privileged position for so long, for decades, their push to innovation has been less urgent than maybe a US bank who is getting hit on all sides by little fintech providers that can go directly, that can take customers from them.
Yes.
If they're providing marginally better service, okay, we'll leave Bank of America and we'll go and join, XYZ digital bank in a second. Here, from a regulatory standpoint, you're prohibited. Like, those banks are stuck. They have a certain number of licenses. The government won't issue them to somebody who's not one of these legacy banks. Those banks are now fat and happy, and these little innovative companies are blocked from doing anything. And so that creates a challenge, but it also creates a massive opportunity, just a massive opportunity. But you just have to, like, that's just something that
a reality you have to be aware of.
Yeah, and then the third kind of like reality is, think about this. You have the US, okay, you have urban and rural dynamics, you have northern, southern dynamics. You have different characteristics in different places, but if you think about the UAE or Saudi or Qatar, the GCC, this region has one of the highest GDP per capita in the planet, and compare that to Egypt, who have 90 million people, but one of the lowest GDP per capita. Try to come up with a service or a product that will sell to both of those segments. You really need to be innovative. If you find a company that cracks that, how to sell to both Dubai and to Cairo with equal effectiveness, then you've got this like flexible, responsive product that is unique. Like, that's where innovation is going to come from. It's trying to solve in one market, which is MENA, try to solve these very different use cases. And if you can come up with a banking product or a publishing product or a F&B product that works in those two markets, well, then that's a pretty interesting like deal. That's a pretty interesting sort of like organization.
Yes, and a much larger TAM, so to speak. Right?
And it's a TAM that becomes interesting. Yeah. There's all sorts of challenges, but it's also super dynamic. It's just changing all the time. Saudi right now is the most interesting place in the world. Yeah, it is not. They're coming. It's a big population. It's not some banana republic that they are supremely important from a geopolitical standpoint. One of the most important players in the world from a geopolitical standpoint.
And a huge group of them, I think, are under 25, right? Is it over 50%?
Yeah, I mean, those statistics. Yes, I don't know what the statistics. Whatever, 70% are under whatever. But yeah, they're young. All the statistics, all of the sort of like jaw-dropping statistics that people point to about the demographics is that they're young. Yes. So and it is also top down, and they're sort of moving at such a fast pace that it's almost tough to keep up with how do we respond to what they're doing. And that's for us, and that's for any company that's going in. How do I respond to the regulation? What do I go through the process of applying for this license, or are they just going to change the license, in the next like 6 weeks to something that's even better for me? So
shall I wait? Shall I go? Yeah.
Yeah.
You mentioned innovation.
Yeah.
And especially someone in your position, in your group, because you get to see, or you have a lot of pitches come to you saying, we are innovative, we're this, we're that. There is BS innovation. It's said, or it's sugar-coated as innovation, and you're going, this is not innovation. And then there is real innovation. What's that distinguishing line for you? To go, oh, no, you're just talking rubbish, it's not innovative at all.
Like, it doesn't matter if it's necessarily innovative or not for us. It matters if it is...
But it has to be in some way, shape, or form, right?
It matters if it's scalable or not.
Okay.
So it's like if you take you know what I mean? It's like that's what we're trying to place bets into companies that are going to be really big, that are going to grow really quickly, and that means that there's a metric that you often look at, which is called your customer acquisition cost, and that means how much do I need to spend in order to bring a new customer in?
Right.
Okay. And so let's say I'm an e-commerce company and I spend, $20 on a Facebook ad. Let's say the way you would really look at it is you would say, I'm going to spend $1,000 on Facebook ads this month, and it's going to bring in 20 customers.
So it's cost me $50.
So it's $50 is my customer acquisition cost. And one of those guys is Kevin, who I brought in through my Facebook ad. Kevin makes one purchase, and his purchase is $75. So that's my average order value against my customer acquisition. My average order value, which is his purchase of $75 against my customer acquisition cost. I'm in the money. That's good. I then follow Kevin because maybe he comes back and the next week or the next month he buys something else. So I'll follow him for 12 months and see how much he spends. And maybe he doesn't just make the one purchase for $75. Maybe he makes 10 purchases for $75. Right?
So now Kevin's worth $750.
Kevin spent $750 with us against a customer acquisition cost of $50. So that you in the rule of thumb is that that you want the $750 you call you effectively you project out how much you think Kevin will spend over a lifetime.
Sure.
And there's finite nature to that. You're not going to assume that he's going to spend the same amount all the time. There's something called a churn, which there's a rate by which people stop buying from you. But you do some analysis on how your customers are behaving, and you develop this thing called the lifetime value, LTV, lifetime value of the customer. You then divide the LTV divided by the customer acquisition cost, and that gives you a ratio. Rule of thumb: if it's higher than 6, then they're doing great. If Kevin is if we're spending $50 to get Kevin, and he's giving us $300, then hey, this thing is working. This is positive. So now you are then determining the growth of where that company can go. You're now investing into that 50. So if I meaning the customer acquisition cost. If I give you 50, I'll invest $50 to get me one Kevin. But if I invest $50,000,
I can get 1,000.
then I can get 1,000 Kevins.
That's right.
And then what does that do for my business? And by the way, if I can make the same margin for every purchase that Kevin makes, which is he buys a Fat Boy chair and then it goes to Aramex and Aramex delivers it to him. So net we're making out of the 75, let's say we're making, $25 net. If I can sell those 1,000 to Kevin without hiring another person, Kevin's just going to buy, and it's just all we're making is $25 for each purchase, without a single additional unit of overhead.
That's a tech scale.
That's
right?
scale.
Yeah.
And that's using technology to scale because maybe you don't own the inventory. It's just on consignment, and that's it. I put my hands up. I acquired Kevin because I'm good at Facebook at digital marketing, and then I figured out my supply chain, and I sit back. And now all I got to do is, invest into the number of Kevins that I want, and into business. Nothing innovative about that. But if it works, if they've demonstrated they can execute,
it's scalable.
Then that's interesting. So it's not really it's not really insofar as innovation leads to more of that, more scalability. Then and there's positive correlation between those two always. But insofar as innovation leads to more scalability, then absolutely, yes, we want something super innovative. But we're not investing into something just for the sake of it being innovative. It could be innovative. It's innovative. It could be innovative, but totally uneconomical to do. It could be. It's innovative to shoot people into the moon at this stage. But maybe you each. Maybe we don't know if people will pay the cost that it takes to get them to the moon.
Sure.
In that case, it's not. We don't want to invest into it. Some people may. Some people may make the bet that no, that's going to the price of getting people to the moon is going to come down, and the price that people are willing to pay is going to go up. So all of us at some point in time, it's going to become a super.
Sure.
Lucrative.
It might
I'm
not
willing
work
to pay
today.
that. Yeah,
Yes.
I'm willing to put that bet now. Maybe. Maybe. And by the way, I'm not saying we would look at it. So all of you people listening who have an idea of shooting people to the moon, we'll take a look at it. Make the argument that you can scale it, and it's something that would be interesting for us, for sure.
For those who have pitched to you or are going to pitch to you, for them, hopefully they'll get your attention some way or another, and they'll have something of value. What are you saying yes and no to? So what are the immediate no's, and what filtered through as a yes for you to have a sit down, to have a look at, for you to take to your co-founders, and then ultimately to gather that investment and provide that kind of seed funding? The
immediate no is an idea. You know what I mean?
Guess what, Tamar? I got this amazing idea.
Yeah. Yeah, the immediate no is something that you're trying to go and raise money prematurely for. And there's nothing wrong with raising money early in the journey of a company. But there is something wrong in going to a company with something that's so like not baked that it's like off pattern. And then you have to make a meta judgment about that person that, look, you just don't know what you're doing. Like you're going to a third party investor so prematurely that I'm not judging the idea that you're bringing.
I'm judging you as a person. I'm judging
you as a person because you just don't get it. Like it's like going to a bank and saying, here, can you lend me money against this book? And they would say, you just have no clue how a bank works, do you?
Right.
You know what I mean?
Yeah. One of the filters for me today is just very simple. In such a competitive environment, if you want just to have an opportunity to even, for someone to hear your idea, to even say no to you, have an MVP. You must have something that you can show, like something tangible.
Yeah.
Like without that, like don't come to me at a business plan. Like I'm not even interested on paper plans.
Yes. I think it's just like, and it's just like getting married. Or, which I'm not, so I can't, don't take this as firsthand experience, but it's like, I definitely have thought long and hard about the process. Maybe that's not the right analogy, but the...
I was excited to see where you're going with
yeah,
that.
exactly.
Yeah.
I mean,
like,
the marriage analogy works for a lot of stuff, but I don't think it works, I don't think it works perfectly here. So if you don't have the resource, that's like number 2 on what are immediate no's. It's when someone comes and says, I need working capital. I need life expenses to be covered in order to do this. I need your money to quit my job in order to focus on this.
Yeah.
And it's like, if you don't take the first part, we are giving you, most of the time, you're diluting 15 to 35%, meaning, if you're going to back an idea, you're going to put $500,000 and you're going to value the company at the earliest stages at, let's say, $2 million. Mm-hmm. So there was this, for forever, and if you think about real estate, it's like, there's a hotel. If $100 was the total amount of money that goes into this hotel project, and I put $100, well, then I own 100% of the hotel.
Right.
And the same thing existed for companies. Okay, if this company is being capitalized with X and I put X, well, then I own X. And if I want to give, I own 100%.
Sure.
If I want to give 5% or 10% for sweat equity for the person who's doing, kind of like operating this, then that's, it's in my good graces, I can choose to do that. But the principle is that the capital relates
to ownership.
Period. Yeah. Now, what the guys in Silicon Valley did, I think, is they kind of flipped the script. It was the epicenter of technological innovation, but it was also the epicenter of a capital funding innovation, which was, I'm going to put 500. 500 is the total amount of capital that's going into this. But I'm only going to get 20% for my 500. I'm not going to take 100%. I'm only going to take 20%. You keep the 80. And the 80 is not for you. The 80 is because I want you to use that 500 to grow. And then I want you to go to the market and I want you to raise more money.
That's right.
So that the 80 then falls now to 65. And then you're going to keep on growing, and then you're going to go to the market and raise more money, so that the 65 now comes down to 50. All the way, you're going to fund yourself through a massive expansion of your scalable product that you've shown to me is scalable, and it's a fast-moving Ferrari, and you're just going to continue to inject fuel into it and just go. It's a land grab. It's a market share, territorial conquest. And you just go, and by the time we get to the point where we can exit this thing and it's $1 billion company, you're going to own 10, 11% of the company. And then that's where we want you to be. When you go and look to list on public markets, then public investors are IPO investors are going to want the management to be incentivized to own a large share of the company, and you're there, and we're happy. And they showed that if I relate it to the old capital for equity model, maybe my 500 over time becomes 1,000. But if I do it this way, then there's a chance that my 500 could become 5 million. They showed that, wow, I can really multiply capital if I set up the company in this way. So that's what you're doing, is you're teeing up a proposition, a marriage between capital and labor that will be conducive to some fast growing engine that will just blow out the market. And that's why you need a big market. That's why the point that I brought up about them. You need a big market for this to work. Well, if you go and I'm giving you 500 and you're going to keep 80% of the equity, it's worth your time to put that together up front. And if you don't have the resources, if you don't have the savings to put in 12 months of effort to get this, to build an MVP, to show early traction, to do customer testing, to put together materials, to incorporate, if you don't have the personal wherewithal to do that without going and raising capital, then you probably shouldn't do that. You probably should just wait, go get a job, and save some money for a couple of years, and then do it. Like there's no, it's like you need to be.
That's a smart thing to do. There's nothing wrong with this. This is the smart thing to do. What you're saying.
Yeah. There's nothing wrong with that, and there's nothing wrong with that at all. And by the way, there's all sorts of other benefits that you'll get by being in the workplace. You want, like us as an investor, we want someone with industry experience. You want, if you've got a great idea and you want to innovate in fintech, then go and work for financial services. Go and work for American Express.
Show that you know the game inside out.
Yeah.
Right.
Yeah.
This is really interesting because we had Nader Amiri, my friend from who's a co-founder of El Grocer.
El Grocer, yes, I know that.
And that was his thing. Like his tip was, if you want to take a calculated risk and go into business, plan for that risk. Yeah. Right. Exactly what you said. Work, save, have what you need to do so you've got that kind of runway.
Yeah, for sure. And there's nothing like that. That's not some like revelatory statement. It's just like sort of practical.
But very often ego gets in the way.
Yeah.
What do you mean I want a job? I want to have founder on my Instagram. Like, what do you mean job?
I think that's
put my idea. You'd be surprised how that's the driver for so many of them.
No doubt that is a major additional sort of challenge in the region. Yeah. And something that I'm a Palestinian, so I can say it, but Arabs are it's notorious. The ego of the Arab person is notorious around the world. Everyone knows that.
It used to be a decade ago. It used to be saying manager on the business card. Now it's the hashtag startup founder.
Yeah,
I think it's evolved.
It's like the rapper who's the CEO.
Well, Jay-Z just raised $85 million for his VC fund. Yeah. So here he comes. But yeah, that's definitely a challenge. There's a kind of level of emotional. There's weight on the idea of respect in this part of the world. There's a pecking order. There's like old, almost like tribal affiliations that need to be maintained or acknowledged that are impediments to like unbridled growth. You can't just act commercially. You can't just make a decision that, okay, well, this is better for us, so let's just do it. If you're potentially offending someone or stepping on someone's toes or
you got to be aware of these realities.
Yeah. Well, I think that's the case anywhere.
So you shared a few no's. What would get you excited to say yes, and then perhaps look into it, and then say another yes, and then be excited to take it to your partners and go, hey, take a look at this. I think we should back this. And maybe you can use one of the examples you invested in as an example of from pitch to leading this
I think that the credibility of the person doing the deal is extremely important. Meaning, if it's someone who has done something that's been a widely recognized success before, and they want to do something else, then that is that sort of immediately gives credence to the deal.
But that's easy because I can imagine now the founders of Kareem, the next idea everyone's going to back.
Yes, exactly.
They had Kareem.
Yeah, that's right.
But what if the person has no track record?
Right. Exactly. Then there's nothing wrong with that. Although
We all start somewhere.
Yeah, yes, of course. Then the burden of evidence of execution or execution abilities is higher. What that does is that's those both hit the same. They hit the same like criteria on the rubric, which is execution. If you've done it before, that there's a spectrum of strength. Okay, at the strongest end, it's something I've done it before, and I'm like,
results speak for itself.
yes. And at the weekend, it's I got a piece of paper that says that I can do it. And you want to be close. You want to move on that spectrum closer to this, as close to this side as possible. So I'm not saying that anything is prohibitive. I'm just saying that the stronger you get,
this is where you have investor confidence.
Yes. Now, if you don't have this, then you can get here, I think, by depicting what you want to do and reinforcing it with a ton of data, of information that shows that you know what you're doing. So, like, if someone comes and says, here's how I'm going to execute, and I am making this is my plan to, like, I'm going to enter this market, and the reason I'm going to enter this market is because I know that the market share is this, and I know that the existing players are this, this, and this, and I know that there's a gap of this, and I know that the margins that these players make is this, and I think I can undercut them, and I know how much it's going to cost me to acquire customers. And the more you can show that you're guided by, it goes back to the Chinese thing. Like, I have a tremendous amount of data. I use that data to make decisions, and I can communicate that to you. So that's what you want to do.
Experience is not there, back it up by data.
Yes,
Yeah.
exactly.
And show that you're not going, I feel it's a great idea.
Right.
Yeah, no one cares how you feel.
No, they don't.
Yeah.
They really don't.
There's no weight on it.
Yeah, there's no weight on it. Right. Yeah. So but you know, there's no entitlement to, like, it's kind of like that question. Well, you got to start somewhere. Yes. But it's not my job as the guy who's like investing
To fund you.
to be that starting point. You know, it's just not like you know, yes, start from.
Why don't you IPO this and then come back to me for the next one?
Yeah, exactly.
Yeah.
That'll be your starting point.
Yeah.
So
Hey, you invested in the guys from Not Standard. I remember when they first set up.
that was our first investment.
Is that right?
Yeah, that was the first.
John
thing.
was one of the co-founders, right?
John is still.
You say not standard?
Not
Yeah.
Standard. Yeah, the suit. Yeah.
Yeah.
I remember when they had started. Take me through the journey. Like, how did you come across them? The pitch, hearing the pitch, why you invested in them?
That's my favorite. That's my favorite story.
Okay.
That was so. I was a.
There was
I
two
worked-
co-founders?
Two co-founders. Yeah. And John Ballet and this guy Matt Mueller, and both American guys living in Dubai.
Yes.
John was like parallel. By the way, he's from Ohio, but he's really like a Texan.
John, if you remember, we had coffee at the Starbucks in JBR. I think it was just before he had started. Or it was at the early days of Not Standard. So shout out to you guys.
Yeah.
Yeah.
No, they're doing great. We were friends.
Okay.
We were like close friends.
Uh-huh.
And
Warm intro.
he studied at the University of Texas.
Okay.
And at University of Texas, he was friends with all of my friends from high school. So then when I moved to Dubai, I said, oh, you gotta meet John. You know, so then we became, you know, very, very close friends. So we're like in parallel jobs. I was working for Waha Capital, which is basically, you know, you're a financial analyst. You're behind the desk most of the time. You're doing work. You know, a big transaction comes up. You crunch the numbers, and that's primarily your job. And he was doing exactly the same thing for a group called the Abu Dhabi Investment Company. Invest AD, they called it Invest AD, rebranded and called Invest AD. So here we are living parallel lives, buddies. In my free time, I'm, you know, just kind of whatever, messing around, going to the beach, you know, hanging out. And he starts working on this startup. I don't take it seriously, but it starts like working. It starts
Getting traction.
And stuff. And then he starts asking for favors. As an example, he would say, here, I built this financial model for my, I would get all these anecdotes. Oh, we went to Satwa and the guy pulled out a flame and tried to burn the fabric, but he couldn't, which means that the fabric is good. He's like, and it's kind of like interesting. But then he starts asking for favors. Here's the cash flow model, but it's not tying. I don't have time to look at it. Can you please just spend an hour and tell me, can you figure out what's going wrong? Then another favor that I'll never forget, he said, we're doing a road show in the States, and we're gonna rent out hotel rooms at nice hotel. We're gonna rent out little meeting rooms in nice hotels and invite people to come, and we're gonna have scotch from Doers. We got Doers to sponsor, and we're gonna give them scotch, and we're gonna take their sizings. So can you tell all of your friends in Houston to come to my thing?
They did the same thing in Dubai.
They did.
Yeah.
So then,
actually, I was at one of those as well.
Yeah. And then at some point,
damn, I should have invested.
No, listen. So he says, at that point he said, look, I'm going to ask you for the next 2 years. It's going to be only favors that I ask of you. I will make it up to you some other time in life or in some future life. But I want you to know it's going to be only me asking favors. And you, will you please, do those favors for me? And I'll make it up to you. That's what he said.
This is communicating well.
Yeah.
This is an example of communicating well, like being upfront about it.
So then it starts to work. And he continues to ask favors. And he says, I'm gonna go and raise a seed round of funding.
So up until now, it's just self-funded.
Yeah. So, and he's still asking these favors. And I find myself, part of me wants to help him, but a big part of me really wants him to fall flat on his face.
Okay.
Here's this dude, parallel life. He's now gonna go and raise money for a startup, and here I am, just a chump, still sitting behind the desk. And so he's still asking favors, but I find myself hey, he'll follow up. Hey, did you email that guy that I asked you to? Did he say anything? And I'm lying. Oh yeah, yeah, I emailed him, but I didn't hear back from him. Sorry, yeah, no, I don't. Yeah, he hasn't written back, but I hadn't even emailed the guy. It's and then I'm what the hell am I? What am I? This is messed up, and I want to help him.
Yeah.
And so I went up to him and I was like, let me give me shares or something, or let me invest.
If you want me to actually email.
And then I'll yeah. And then he was John was oh, I don't know, man. I only got big guys who, there's only big guys interested in investing in I don't know if I can accommodate your, just your little thing, And then I'm please, please, John, let me invest. This is totally messed up. So then he's okay, fine. So then I invested, whatever. I invested $25,000. And then the round closes. He raises a total of $250,000. And I was the biggest, there was no one bigger than $25,000. And then it's oh, dude, screw you. With that.
He pulled you in real good.
Exactly.
Yeah, he pulled it good.
Exactly. And then after that, I make this investment. They have a dinner at the Ruth's Chris Steakhouse in the Marina. And they have all the investors come. Everybody wears suits, and they do They have a report, a quarterly report with little spiral. And here's our numbers for the quarter. And everyone eats and talks about how great they are. And then afterwards, you take the thing away, and then I go to a party in the Marina, and I start showing all my hey, look at my startup. I don't know, you see my startup? Look at my startup. See the performance of the startup.
True to your Arab roots.
Yeah, exactly, exactly. And then everyone at the party was hey man, why didn't you tell? I want to get in on that. This was 2012. This was in 2012, end of 2012. Hey, why didn't you tell me? Hey, I want to get in on that. And that was the start of Ventures. VentureSouq started as a little club of people that we did
informally. You guys were just
investing into friends of friends and friends startups. And Not Standard was the first one. And then and that's 4 people sort of coalesced into the people who were kind of doing most of the work. And then 3 years later, we quit our jobs and started doing it full time. So that the whole thing is
it was
and Not Standard
friendship driven.
Yeah, friendship. No, totally friendship. No, that's definitely something that we take a lot of pride in. We're a completely organic, self-built, independent firm. We really take pride in the fact that no, we are our own people. We're independent of any particular sort of like big backer, and that's good. That's good. Personally, for me personally, that it means a lot. That's a big part of my pride. One of the questions that you asked was, what do you consider to be your
a milestone,
and that's
or an
it.
accomplishment. Yeah,
that's it. Is that I feel like now I'm my own man. We'll see how things evolve. But right now, I feel like I've got a strong thing going, and it's mine. It belongs to partners that are
sure.
equal.
You've sown the seeds.
Yeah.
You've worked on it.
Yeah,
and it's growing.
yeah.
What's another example of perhaps where it started cold? So you didn't have the benefit of something like knowing John or having gone to the same university and having that kind of mutual friendship, where it was really very much, perhaps you guys are friends today, but it had to follow through the parameters that you guys would have set.
I think that the company the success story that you asked me about during the break,
right.
Frontier Car Group,
they were out of Germany, right?
The team was
founder?
based in Germany.
Okay.
But they really operated in
the frontier markets.
Yeah, big, interesting frontier markets. And when I say big, I mean like the population size of the markets that they operated in. Indonesia, Pakistan,
the 80
Nigeria.
Million, the 80 million plus kind of.
Yes.
Markets,
and so and the service that they were offering was not terribly innovative. They were a used car marketplace. They are exactly like Sell Any Car, if you know Sell Any Car.
I was just going to say, is it
Same.
like sellanycar.com?
Same.
Yeah.
And the interesting thing is when we met them, and so what was it that sort of like got us excited about that? One, the source of the intro. The guy who brought it in was someone that we trusted a lot, and it was kind of like if he's saying it's good, then we
should look at it.
Then we'll take it seriously. And then you meet the guy. So then the stage that we invested was after the Series A. At that point in time, you have real traction.
Sure.
You're able to see real data. This is how they're performing, and it was phenomenal. The size of the market was massive because they were in all these big, interesting markets. And then they had to give evidence to their ability to execute. They had hit off these partnerships that were brilliant and potentially enormous. So Shell had all of the downstream distribution for petrol in sub-Saharan Africa. Not all of it, but they had a huge presence in like gas stations in sub-Saharan Africa. So these guys had cut a deal where they would just latch their own service with Shell across all petrol stations that Shell owned across sub-Saharan Africa.
Yes.
Then they had a deal with Uber where they were going to finance the cars that Uber drivers could use in order to take people on rides, and then they would be paid back over time by the fares
income made. Yes.
So they had set up these like super interesting partnerships.
And you were coming in a Series B, so you could see the track record.
Exactly.
Right? Yeah.
Exactly. So I mean but it was not a warm intro, but you put it was not a first degree person. It wasn't in my immediate circle. It was an intro. But we took it very seriously on the strength of the intro and on the demonstration of their ability to execute. And that's and those were the main. Once those two and I met the team was phenomenal. But once those two kind of like dominoes fall, then there's a good chance that it goes through.
Have you made any wrong decisions?
Yeah. Yes.
Would you share?
Tons.
You can take this in any direction, personal, work-wise, in any directions. Would you share one? And perhaps once you made that decision, how did you adjust or how did you pivot your thought process to moving on from it? I ask the question because very often we assume people don't make the wrong decisions. And if we don't have that assumption, sometimes when we make a wrong decision, we dwell on it for a long time, none of which is self-serving.
You can answer the question at the surface level, but if you actually think about the question, it's harder. I don't think that it's I can't look back and say that we made the wrong decision here. We made decisions that turned out to be that did not turn out well. Going back in time, could we have done that differently? Could we have evaluated it differently? Yes, for sure. Were there warning signs that become clear in retrospect? Yes, of course.
Always. Hindsight is 20/20.
Yeah, but was there a point in time where like we took a step that really hurt, like directly hurt us? Not anything that I'm gonna go back and feel guilty about. You know, there's a lot of things that we could have done that we didn't do. There are a lot of things that I could, knowing what I know, you know, years later, I would take back in a second.
Yeah.
But there's nothing that's like
the value of wisdom, right?
Right.
Yeah.
Yeah. There's nothing that it's kind of like, I think that we just clearly did the wrong thing at that time. I think our moral compass is pretty straight. It's pretty clear, and I think our commercial judgment is safe from it's balanced.
Okay.
Meaning we challenge each other. We got five people that are all challenging each other, and if you can convince, if those 5 people are convinced that something is good, then that's a pretty good, like,
that's a huge
bellwether.
flip side.
Yeah, it's a pretty good bellwether. You know, it's a pretty good indicator that it's good.
I wanted to ask you this question and I forgot, and that is a scene that became really popular, at least in my mind, was on Shark Tank, where O'Leary keeps, you know, when someone asks for funding, they'd be like, oh, I want $100,000 for 10%, and he's like, does that mean you're valuing your company at $1 million? It's not worth $1 million. So I've set this up to ask you the question, how do you, when you're making an investment, how do you come to an agreement in terms of valuation? And people that might just have their heads in the cloud, my company is worth 10 million, so your million only gets you 10%.
Yeah, there are, I've got like a list of 10 different ways to evaluate the valuation of a company. And the short answer is that it is negotiable. It's something that is agreed by the company and the investor. Like the market price is set in the money being raised. But how do you argue for one valuation or another? I've got 10 different ways to do it. Like you can look at regional comps and international comps. You can do a DCF. You can do dilution analysis. You can do market sizing analysis. You can do bottoms up analysis. You can do unit economic analysis. And you can use the Berkus method. There are 10 different ways that you can pinpoint approximate tools that you can use to come up with a valuation. Ultimately, what you're going to do is you're going to sort of triangulate. You're going to see where those numbers converge, and then you're going to take it to the counterparty and say, "This is what I think is fair." And so that's what you do. That's how you decide. It's a negotiation, and the more data that you can find to support what your position is on valuation, the stronger. Most of the time, if we take a stack of paper and show it to the company and say, this is what we think your valuation should be based on these 10 different pieces of analysis that we did, if you set the rules of negotiation clearly, and it'll be fine. Meaning, if you disagree with this, then show us alternative numbers that point to whatever number you want. Yeah. And the number of times that people have actually come back to that with something that is like strong enough to defend, it's like, 1 out of 50 come back and actually say, of course, a lot of people come and say, no, I think it should be higher.
Sure.
But no, that's not how we're negotiating. Yeah, this is not corporate bazaar. So the response to Kevin O'Leary's like method of tell me now that the intrinsic value of what you have in terms of assets and liability, that's by the way one of those methods that you can look to determine the valuation of the company is you can just look at the assets against the liabilities that the company has. What does the company own? Stuff. Does it own desks and computers? Less does it owe money to people?
Sure. Yeah. Or that
is one way.
Multiple of cash flows.
Yeah. So there are many different ways. And so for him to say the company I don't think is worth $1 million today, it's not supposed to. What you're supposed to be doing, like I said, earlier, is you're marrying capital plus labor in some fair arrangement that will set it up that will make it, amenable for rapid growth. That's what you're doing in scalable tech startups. That's what you're trying to solve for at the earliest stages. So if your litmus test was what's the value of the company today, period, and that's what I'm going to buy, none of these deals would get funded. They wouldn't, because none of them are worth intrinsically today what investors, give.
They're raising for projected value.
Yeah,
right.
You're raising for projected value and to preserve an equity, a cap table balance that will allow you to go and raise money in the future. That's the primary sort of like funding model that people are using today.
In business, as in life, there's pivotal moments. How we deal with these pivotal moments will reflect on how much we grow and opportunities we get to see and capitalize on. Could you share with us a few pivotal moments, perhaps in your life? What you went through, why was it a pivotal moment, and then how you grew and kind of went to the next level?
Yeah, I mean, you could start pretty early. When I was young, I was fairly certain that I would, like, I had this worldview that was all entrenched in Texas, and I just kind of was under the assumption that I would go to university in Texas, and then I would go back to Houston, and I would get a job, and
that was the orbit.
Yeah, that was the orbit, and then the removal was at the behest of my sister, who was studying in the Northeast at the time, and she said, "Look, your scores are like good enough. Like you on paper you're gonna be strong enough to apply to one of these schools, and you should do it." And so, that was the first time they were like, "Okay, I'll try to do that. That sounds good." I wasn't driving. I wasn't like, that wasn't a major goal of mine when I was younger. It was just, I ended up in a position where, I was fairly competitive. I was pretty disciplined. Pops would make me sit down and do my homework for several hours every night. And, that.
He forced discipline.
Yeah. Yeah, we'd sit down with it. It was just routine.
Yes.
The routine ended up in me having, scores, GPA, and scores that hey, you're good enough to. So then leaving that orbit, going to the next orbit, was kind of like, eye-opening. I think everyone, when they go to university, they have an eye-opening experience. But then leaving that orbit, going to another one, I went to Beirut when I was in college.
That would have been rather different.
It is, you move from one orbit to another orbit when you go to college. College is itself an orbit.
Sure.
And so if you remove yourself from that voluntarily, then that opens it up even more. There's something narrow about landing in a university and then going into the city, into the job force, in a cookie cutter type of path.
Yes.
That actually is not like, there's a potential that you get stuck in the same orbit starting with university.
Yes.
But that didn't happen. When I went to Beirut, that sort of pulled me out.
How did you end up going to Beirut? Like, what was the reason?
I wanted to go to Buenos Aires. I wanted to go to Buenos.
It's in the same direction.
Yeah, exactly. I wanted to go. I was like, I really was a big fan of Eva, the story of Eva Perón, the story of
I don't know it.
Juan Perón was the dictator of Argentina, and he married Eva Perón.
Okay.
And they told the story of this dictatorship from the perspective of Evita, who was Madonna. So Madonna played Evita in the movie, or whatever. But I just thought this was the coolest thing.
And this was in Argentina.
That was in Argentina.
Okay.
And I spoke Spanish, and I thought, I want to go and do the Spanish thing.
Yes.
And so then I applied for a scholarship to go that would allow me to go to Buenos Aires for the year. The university would make funding available if you wanted to go to study internationally. And I couldn't get that. I didn't get that one. But I could get, because it was a much narrower pool, there were much fewer people that were applying, I could get a scholarship to go to the Middle East. I could go to the Near Eastern Languages and Civilizations Department. They had equivalent funding to give to students who want to study internationally, but much fewer students that were applying. So I went there and they were like, yeah, you can get the scholarship. So then I basically went to what I thought was the most fun place in the Middle East, which was Beirut. That was the kind of like, that was the path to get there. But doing that, you know, yes, it was extremely fun and interesting. And had I known then that I was going to be moving to Dubai, then that was like that was the most prescient move that I could have made. You know, now I've got this alumni base that I'm basically a part of from AUB, and in addition to my alumni, you know, what I got from the US. But it's really removing yourself from the orbit, from the kind of narrow college orbit that was actually more significant. Then
because after that you find yourself in the White House.
Yeah, so then I so then I got this internship at the
How
White
does
House.
a kid get to the White House?
As from being from Texas and with a Texan in the White House, you just, you know, through first degrees of separation, you find somebody who's got an in, and you get yourself an internship.
Okay, because the move to Beirut wasn't planned, so to speak. Argentina didn't work out, so I'm going to go to Lebanon.
Yeah.
But the move into the White House, that was planned.
Yeah, that was, yes. I mean, that was the coolest thing that you could do at that time.
What was the pull?
For a time, I considered, you know, maybe I should go and be go to Washington. You know, go to, like, I'll be
play the game.
Yeah, I'll be there. Like, I'll do that thing. I'll be a politician or an analyst, you know, think tank guy. That was one of the career trajectories that I was thinking about. And going to DC, and I could get into this internship with the White House because of the network of people. It was all, at that time in 2005, the summer of 2005, it was all like, it's like the whole city was Texans. You know, it was awesome. It was great. I lived right in Georgetown, and like I had this.
And I knew everybody.
It was true. I mean, this is kind of interesting. I worked in the HR department of the White House. So the White House has appointment. They appoint thousands of positions. It's not just the staff there in the West Wing or in the executive office building. There's also thousands of different roles in all of the departments.
Their little ecosystem, so
yes,
to speak.
and they're all appointed by the executive branch, by the president. He appoints thousands of people. And so he has a system, he has a team that is set up specifically to make these appointments. And they had a very systematic way of designating screening who should be appointed to what. And they literally had color codes for who the referrer was. So if it was someone from the president's family, then they would be in orange. If it was recommended by a cabinet member or an undersecretary of a cabinet member or whatever, then it would be a red. So they color coded who the referrer was, and then based on that, if it was a big donor, if it was someone who had donated a lot of money to the president, then that would be a green. And then you're kind of like dishing out, you're kind of puzzle. You got this like map, and you're kind of like puzzle piecing to make sure that the people who are doing the recommending are taken care of. This was my first boss, and he wasn't like that sage of a guy, but he at one point gave very practical and good advice. He said, you either want to be in a high growth market or a high growth product. So go to some product line that's totally new, that's going to grow, and just get in there, or go to some market that is totally new and just get in there. And basically, his advice was a rising tide lifts all ships.
Absolutely.
So I saw Dubai as that. Really, I was working at this bank, and the product that I was in had collapsed and was the attention and the ire of like everyone in the world. And it was a really it's an interesting environment to be in, but not positive in any way. And I told you I had this feeling for this period, for like an extended period in my life where I should be in the other place. You know, when I was in Damascus, I should be back in New York. My buddies are all in New York, sort of like cutting it up. And then when I was back in New York, I should be back over there because this is like, you know, the whole ship is sinking over here. So, but when I looked at Dubai and thought, that place, like, you've got all these people, British guys going over there and like striking a fortune. And I like have an Arabic last name and I speak Arabic and I like, I should be over there. Like that's where I should go. And basically that's like, as I saw it as a cosmopolitan place for Arabs of all kinds. And that's exactly what it was.
Yeah.
I also saw it as a fast growing market. That turned out to be both accurate and inaccurate. It's better characterized as a dynamic market. There are times when it's flying and there are times when it's recoiling, but it's totally interesting all the time. It's totally dynamic. Yeah. So I feel like I was after the environment from a like professional standpoint that I thought would be interesting. There would be opportunities there. Mm-hmm. And then from like a personal standpoint, it is I grew up as a Palestinian American in Houston, Texas, with an identity firmly rooted in my place there. To come over here and sort of redefine myself
and cultivate.
Yes. And now I and then over time become sort of like the ambassador for my broader family. Like we have a big family that's here. And now I'm, the person who's, largely responsible for making sure that those relationships between my family in Houston and the broader family over here stays intact. Mm. That gives me a real purpose. And then my just demographic profile as an Arab American is good. It's valued.
Yes.
It's like trusted. It's it's
best of both worlds.
Yeah.
Yeah.
And then the business opportunity that I was in private equity, and that maybe is not there. Like the serendipity happened in the move. Like moving into venture capital when we did was a very, very good move. It precipitated, it preceded a big regional turn into entrepreneurship.
Yes. You went in just before it became popular.
Yeah, just before.
Yeah. And what's your thing now? What's your focus as VentureSouq? As the 5 founders who are operating, fingers on the pulse. What's your intention? Because I know that on the phone you mentioned about building an ecosystem.
Yeah.
So perhaps if someone's watching or listening to this and they're keen to be part of this ecosystem, or they'd like to know in terms what you encompass, this would be a great place to share perhaps an overall picture of what's happening.
Yeah, I mean, I think at the core, when you distill through everything, our job is to invest into what we think are fast-growing and potentially high return investment opportunities, companies.
So going early. Unicamels.
Yes.
Ideal.
Exactly.
Count me in.
Right. And I think there's quite a few people who are doing that. Mm. Where we're different is that we are realistic in how investors behave here. We understand that investors each see themselves as strategic. In other parts of the world, you have institutional pull of money. Mm-hmm. The US, you earn $100,000 and they take $35,000 of that from you. They pull it, taxes.
Sure.
Those taxes go to funding the national budget. A big portion of them go into Social Security, and that Social Security,
the 401s and
is a massive pool that is used to fund, to fund needs of people in the future. So you're pulled. You have 401ks, you have pensions, you have Social Security. You have these massive pools of capital that are collected structurally from you. Mm-hmm. And then you have people that are responsible for managing that, and they have so much money that it's efficient for them to outsource that to other managers. So here I'm the California pensions, and I need to allocate. I want to allocate my money to real estate and public markets, mutual funds and hedge funds and private equity and venture capital. And my job is just to make sure that those allocations get done. But for venture capital, I'm going to give it to someone else and he's going to manage it. So now you have an array of companies that are venture capital firms that pull this institutional money that by design is there. You know, they need to give the money to this guy to manage on their behalf. Here, there's no institutional pull. The money just comes and it sits into your account.
That's right.
Period. So now you need to decide whether you invest or not invest. That results in a totally different responsibility or requirement for the venture capital firm. Now my job is to in a way that is efficient, go and extract from the long tail the capital. We need to mobilize capital that is distributed across a broad number of people that all have their own requirements, not set up a proposition for one large investor who's going to come and give me money. So we really need to become a service for a broad number of people who all want to invest into the venture capital ecosystem.
But then you have to do things like what we discussed when we were off camera, where you have to educate them and telling them that it's different here, because as a VC, you'll have your, I guess, private fund, if that's what you call it, where if you're looking at 10 deals, you might put the million and you go 100,000 into the 10 deals, which means that your risk is spread across all 10.
Yeah.
Whereas one of the things you have to educate an investor, say like myself, when I said I'd like in on the deals. If I'm putting in my 10K, if this is my only 10K, then the numbers in terms of the risk I'm taking is far higher.
Yeah, absolutely.
Than what you're doing.
Yeah, absolutely. We are investing into companies at a very early stage that we expect to grow very, very quickly, but there's also a high probability that they're going to fail.
Sure.
And so in a way, it's kind of like a bet. And you need to play the statistical game. If you need to invest into multiple, and what we say is 8 to 10 at a minimum for you to be diversified yourself. So either you give money to a manager and say, you put it into a pool of these companies. And there I'm diversified. So if one of the ones that you pick pops off, then I do well. But if, when 9 of them don't do well, then I'm okay. Or if you don't want to do that, then you need to do it. You need to replicate that diversification yourself. But there's in terms of education, there's 2 levels here. One is teaching people how to evaluate what could potentially be a successful company or not. And we've talked a lot about the different characteristics of what a successful company should demonstrate at an early stage. But 2 is to understand like the rules of investing.
Yeah.
Full stop. Like forget about the evaluating the company.
Yes.
What are the rules? What am I signing up for when I invest? What are the terms that I'm getting? What are the rights that I have in this company? What are the what are the expectations from me?
Yeah.
And what sort of documentation is required? And what information am I gonna get on a regular basis? How do I file this with my relevant tax authority? You need to know this before you invest in anything. And you need to know how to tell if the company is good or not. Like you could they've got a lot of views on Instagram, or they've got a lot of followers on Instagram. The product is really cool. I really like this, yogurt parfait with such a cool brand. But there's a lot more to evaluating whether the company is going to work or not. You need to know that. But you also need to know what is the instrument that I'm what actually, when I give the money, what am I getting in return? What is the security that I'm getting, and what are my rights with that security? And what are my obligations?
A simple example of a lot of investors not realizing what they were investing in was when the Bitcoin and blockchain thing was taking off again in 2018.
Yeah.
And the number of people who didn't know that when they were buying ICOs or tokens, that it's far different than investing into companies the way this investment is.
Yeah.
With an ICO, you're not getting any shares of the company.
Right.
Nothing.
Right. Yeah. Nothing. Yeah.
And when I was asking people, so many of them didn't know that.
Right.
Do you run workshops like this education?
Yeah, we do.
Do you provide?
Yeah, we do a ton of them. We do a big open conference for anybody who wants to attend in Abu Dhabi with NYU.
Okay. This is done monthly?
No, we do it once a year. It's called Angel Rising. And we've always done it in March, but this year we're doing it in November to coincide with the expo. And then we host pitch events and smaller investor education. We're doing one next week, so we're doing one a week from Tuesday.
No worries.
I don't know when this is airing, but we're doing.
Yeah, what we'll do is we'll place the links. you provide me the links
Sure.
in terms of your regular events or events that are coming up, if it's monthly or yearly or what have you, and we'll place it all in the show notes.
Okay.
That way, whoever is watching this, said we don't know when they're going to watch it in terms of time frame.
Yeah.
They can at least dive into your world.
Yeah.
And figure out what's the next one you're doing.
Yeah. Yeah, we do a ton of these things.
Yeah.
That's marketing for us,
But this is also powerful. Like what you said made me realize, wow, he's right. Okay, so it's not only the 10,000. I should have a pot of 100,000.
Yes.
And then come to you and say, hey, I'd like in on the next 10 deals.
Yeah, that's right.
That you guys have vetted.
That's right.
So I can have that kind of the same reduced risk.
Yes, absolutely.
Or spread out.
Absolutely. Yes. Yeah. So that's our job. We evangelize this type of stuff. We are at the end of the day, we and any venture capital firm really is an intermediary between the people who are investing their cold hard cash and the companies who are receiving it. Mm-hmm. We are a function that sits in between, and all venture capital firms are. And that's when you ask me what is the one thing that's a misconception. The misconception is that it's my money. It's not. I'm an intermediary. I'm not a broker. Because the way that we operate is different from a broker, but I am an intermediary between the people who have capital to invest and the companies who are receiving it. And by the way, I'm one of the people who has capital to invest.
Yes.
But my role in VentureSouq is as an intermediary.
You're like Match.com.
Yeah, I'm like Match.com.
In essence, right?
Yeah. The more of this investor education stuff that we do, the more people will come through us.
Well, it's that thing of a rising tide raises all ships.
Yes.
Right?
Yeah.
You're educating people. You're developing that ecosystem.
Yeah.
And then ultimately that results in more transactions and everyone benefits across the board.
Yeah, absolutely. The point that I was going to make was that as an intermediary, one of the challenges that we always have is for the people to go around. And all venture capital firms do.
They're trying to bypass.
Yeah, just like a housing broker. I would rather not pay. There's a fee associated.
The 2%.
There's a service,
yes.
But there's also a fee, and I would rather. I'll take my chances by not having the service if I don't have to pay the fee, and that's something that we always have to protect against. There is in the moat that the venture capital firms have built around themselves. Historically, was driven by two things: asymmetry of information and asymmetry of access. Meaning, if you don't go through us, then you will not be able to invest in these companies. And we know how to evaluate better than you do.
But that was in the past.
That was in the past. Now, with the availability of information and with platforms like ours, they can go directly in. So it really is collapsing the moat. Like we're kind of like facilitating our own demise, if you will.
Sure.
But you
find a way to Uber into the next generation.
Yeah.
What was
and I
the
think
taxi ride is now
exactly.
Uber.
And we definitely see that. Like that's definitely a big part of what drives us is that there is something that's fundamentally broken about VC in the region. Like the same purpose that these guys exist to take money from big institutions who then give them, they're just sub-allocators of capital. That's not the case here. Here, there's no large pool that you're pulling from. It's all distributed. So our job is actually to matchmake. Well, that becomes a different, our daily, what we're doing becomes totally different than what a U.S. venture capital firm would do. So this is something that we've got to, continue to evolve ourselves.
Awesome. I'm going to place all the links in the show notes if you're watching or listening. And then depending on when you're watching or listening, you'll be able to see what's coming up next.
Yeah.
A couple of parting questions, personal. What's a guiding philosophy that you're living by? It could be a quote you read when you were at university, something your sister told you, you watched it in a movie, but it's in essence that kind of, this is the way you live your life, or this is the way you make your decisions by?
It's a quote.
Okay.
Which is a John Wooden quote. John Wooden was a very famous basketball coach for UCLA.
Yes.
And he said, "I will prepare myself, and then perhaps my chance will come."
Well, that's a good one.
I will prepare myself, and then perhaps my chance will come.
He was one of the greatest coaches of all time.
Yeah, he is.
Right.
He's considered the greatest coach.
Yeah.
And I don't even take credit for that. That was my best friend in college used to say that all the time. And I actually I took it from him, but I adopted it. It's you just work your butt off.
Yes.
And then the opportunities will come.
100%.
Yeah.
100%.
Yeah.
In a world where everyone's distracted and attention seems to be a very rare commodity, if you had 60 seconds of the world's attention, what would be your advice to someone that's perhaps either looking at getting into entrepreneurship, or is perhaps lost in life, or is maybe the younger version of you, maybe 15, 20 years ago? Whoever you'd like to connect with, what would be some useful advice that they can take on having the wisdom that you have today?
It's a good question.
I hope it's not like the good question, which was one of those generic startup questions.
What do you think about Tamar, what do you think about startups?
I will slap you right now.
No, I mean, I think that the advice that I would give is to lean into. There's a natural momentum to almost everything, and feel the pulse of where that is and lean into it. It's not dissimilar from the advice that my first boss gave me. You know, find a high growth product or find a high growth region. But maybe my advice is even a little bit broader. There's a pull. There's a natural pull coming from all the time. There's a pull, and you should lean into that. And what I mean by that is, like, you know, if you go back to 2006 when I was graduating from college, there was a strong pull. I had some certain conviction that I wanted to be in finance, that I wanted to go into banking, that I wanted to go to Wall Street. That was driven that was more historically driven than what's current. If I had actually felt the pull, then I would have gone, you know, go and join Facebook, go and join Google. These are tiny companies at the time in 2000. These are early stage companies at the time. And I think that if someone is listening to the current, and I think that I try to do that now, then let that guide you. Let the poll guide you. It'll tell you, like, the momentum. There's a natural momentum to things, and listen to it, and it will guide you on where to go. You know, that's my general advice. And I think the same thing that we need to sort of pay attention to as a company.
It's easy to overlook it.
Yeah,
But
it is.
Yeah, if you take the time to be aware, you'll feel it. That's really good advice, man.
Yeah.
That's really good.
Hey, thanks.
I appreciate you making the time.
No, thanks for having me.
It was awesome. Folks, I got so much out of this. There were so many points. And in actual fact, you would have noticed that I was relatively silent on this episode from my usual self, but I took in so much. Watch this video again, listen to this podcast again, because I guarantee that you will get far more the second time. As you know, I take summary notes, which we make available on the website, kevinabdulrahman.org/podcast. Type in Tammer, and it should pop up. There were gems that was shared, and I really appreciate you having done that. We'll make all the links from your world available. That way, whenever you're watching this or whenever you're listening to this, if you'd like to go, and I recommend you do because I will as well, go and get yourself educated if this is something that's of interest. It's extremely powerful. As you know, our show has got nothing to do with showing off. We hope that with every episode we can help you get inspired, get informed, and get going. I'm sure we were able to do that with this episode. If there was a thought that was shared that you'd like to continue the conversation on, make sure you do so below the video. If you have questions, ask the questions. I will try and answer them. If they're outside of my domain, perhaps we could ask you to take a moment and answer some of the questions. That would be much appreciated. If we're unable to do any of that, we'll get another guest to come in and perhaps answer your questions. Speaking of guests, who would you recommend? I'm actually going to New York next week. Maybe I should hit up John. Is he in New York?
Yeah, talk to John. Definitely talk to John. I mean, that's been they've had a whirlwind of experience. You know, I would talk to John. He's great, and he's like he's full of kind of like golden snippets, anecdotes. You know, hard hitting kind of lessons.
All right.
He's great. He'd be great.
Cool. I'm going to head up, John. I'm going to go through my emails from, I think, 2012 or 2013.
Yeah.
And I'm sure it'll come up. If I can't reach you, John, then I'm going to use my warm referral to get to you. Hey.
It's orange. It's an orange referral.
It's an orange label. Hey. See, it's about learning and putting it into action. And knowledge alone gets you nowhere. Folks, until the next episode, remember, be kind, be ambitious, be grateful. I'm Kevin Abdulrahman. This is How Do They Do It? Man, appreciate it.
All right.
That was actually super
That was good.
cool. Thank
that
you.
was good. Yeah, yeah.
Thank you.
Yeah, thank you.
I think it's really funny when you get the beep out. Like, I just think it's funny.